Good morning, ladies and gentlemen. Welcome to the AUROBINDO PHARMA Limited Q2 FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Krishna Kiran, Investor Relations, AUROBINDO PHARMA Limited. Thank you, and over to you, sir.
Thank you. Good morning, and a warm welcome to our second quarter FY21 earnings call. I am Krishna Kiran from the AUROBINDO PHARMA Investor Relations. We hope you have received Q2 financials and the press releases that were sent out yesterday. These are also available on our website. With me, we have our senior management team represented by Mr. P.V. Ramprasad Reddy, Executive Chairman, AUROBINDO PHARMA USA, Mr. N. Govindarajan, Managing Director, Mr. Sanjeev Dani, COO, Head Formulation, Mr. Santhanam Subramanian, CFO, and Mr. Swami Iyer, CFO, AUROBINDO PHARMA USA. We will begin the call with summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitation statements relating to the implementation of strategic actions and other affirmations on our future business development, and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties, and other important factors may cause actual development and the results to differ materially from our expectations. AUROBINDO PHARMA undertakes no obligation to publicly revise any forward-looking statement to reflect future events or circumstances. And with that, I will hand over the call to Mr. Santhanam Subramanian for the highlights. Over to you, sir.
Yeah. Thank you, Krishna. Good morning, everyone. We hope all of you and your families are safe and healthy. We will now discuss the results for the second quarter of the financial year 2021 declared by the company. For the quarter, the company clocked a revenue of rupees 6,483 crores, an increase of 16% over last year. The EBITDA before Forex and other income increased by 23% year-on-year to rupees 1,433 crores. Net profit increased by 26 year-on-year to rupees 806 crores. In terms of the business breakdown, formulation business in Q2 FY21 witnessed a growth of 18% year-on-year to rupees 5,654 crores and contributed 87% of the total revenue. API business witnessed a growth of 3% year-on-year and clocked a revenue of rupees 829 crores. In the formulation business, US business posted a growth of 12% year-on-year to rupees 3,190 crores in Q2 FY21. On a constant currency basis, the US business increased by 7% year-on-year to around US $430 million. During the quarter under review, we have filed 24 ANDAs, including 10 injectable ANDAs. Revenue of AUROBINDO PHARMA USA, the company marketing oral products in USA, has increased by 8% for the quarter. Revenue of Aromedics, the injectable business, decreased by 15% year-on-year to $64 million for the quarter. However, the injectable business witnessed a healthy growth of 25% sequentially. We have filed a total 144 injectable ANDA as on 30th September, out of which 78 have received final approval and the balance 66 are under review. European formulation revenue clocked at rupees 1,515 crores in Q2 FY 2021, an increase of 8% over last year. In euro terms, the revenues decreased by 3% year-on-year. However, Euro business have recovered on sequentially in Q2 FY21 by recording a healthy growth of 15% in rupee term and 10% in euro over the previous year, which was earlier impacted due to stocking up at the beginning of the pandemic. Growth markets revenue increased by 40% year-on-year to rupees 446 crores in Q2 FY 2021. On a constant currency basis, growth markets reported an increase of 33% year-on-year. Growth markets have recovered and sequentially grown by 54% in rupee terms and 57% in constant currency terms after Q1 FY21 was impacted earlier due to stocking up at the beginning of the pandemic. Yearly formulation revenues were at rupees 503 crores, increased by 111% over previous year. On a constant currency basis, yearly revenues witnessed an increase of 100% over the previous year. The increased conversion from TLE to TLD across geographies have led to this growth. R&D expenditure is at rupees 408 crores during the quarter, which is 6.3% of the total revenue. Net organic capex for the quarter is around $37 million. The closing rupee versus US dollar rate was rupees 73.770 in September 20 versus rupees 75.505 in June 20. The net debt has marginally gone up to $194 million at the end of September 20. The majority of the company's debt is denominated in foreign currency. The cash and short-term investment is at $483 million. The average finance cost is at 1.3%, mainly due to availing multiple currency loans. This is all from our end, and we are happy to take your questions now. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. So my first question is on the gross margin in this quarter. We've seen a pretty sharp improvement quarter on quarter and year on year. Is this sustainable? What drove to this improvement, or should we look at gross margin similar to what we've been guiding in the past?
So the increase in gross margin due to change in the geography mix as well as the business mix within US. Also, individual businesses have contributed better margin due to favorable product mix, especially the injectables in US. We had NBOs which have contributed to good margins also. Also, the beta-lactam which has low gross margin, which has non-beta-lactam has degrown this quarter, and this has contributed to a favorable mix. If you recollect, we have said in the past earnings call, we will target not less than 58 to 59% GM, and it is our endeavor to keep on improving the above.
Understood, sir. So for the full year, we should still look at it in the 58 to 59% range.
If you recollect, Mega, we said no, the currency rate at this rate will be doing better than what we have said, and if there is a change in the currency rate, etc., for whatever appreciation of rupee or etc., it will be. But at this stage, we don't see a problem in terms of maintaining that and moving on above 59.
Understood. My second question is on the Natrol divestment. If you could give us some color on the thought process behind this divestment, and second, how do we plan to use the cash, capital allocation priorities for the use of this cash?
Yeah, sure, Neha. Natrol is a very good business to own, and we actually really enjoyed having that company in our portfolio. However, the business has reached a critical mass, and for the next leg of growth, it needs a lot of focus and investment in terms of brand marketing, in terms of advertisements, in terms of positioning the brand, etc., etc. So actually, it would be appropriate for the business to be in the right hands for a further level of growth. Hence, we decided to divest the business. On the other hand, you would also appreciate that we have made a good return on our investment. On the capital allocation.
Yes, sir. Sorry.
The capital allocation, so we have been mentioning this in the past as well, that we will not be looking at any large ticket acquisition for the next couple of years. Our current year CapEx should be around $180 to $200 million. We are also setting up an injectable facility for Europe and emerging markets in Vizag. Also setting up a capacity for inhalers and dermatology in the US. We're planning to expand our API capacity because this is an opportunity for us to grow the external sales. As of now, we have secured ourselves in terms of the capacity requirement for the internal supplies. Our spending on specialty product portfolio will also be increasing and as we move ahead. Apart from this, we also need to invest in PLA in case if we move forward.
Understood. Okay. Understood. Thank you.
Thank you. The next question is on the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi. Thank you for taking my question and good morning. The first question is on R&D. We have actually seen a sequential jump to about 408 crores. Now that's about 6% of sales. So this is something that was flagged, but just want to know what is the constituents of this particular R&D jump? What projects is this being used for, the incremental part?
Yeah, so current quarter, the incremental part is more towards the biosimilar strength. In fact, most of the clinical trials got concentrated in this quarter because of slight delay because of the pandemic. And for the full year, so even though you are right in terms of the current quarter, it is around 6.3% of the revenue, which is around 408 crores. And for the full year, we expect it to be in the range of 5.5 to 6 is what we are aiming at.
Yeah. So Govind, so this biosimilars you talked about, if you can help us understand split of that into generic versus say non-generic, if I can use that term, right? Either biosimilars or complex. If you want to kind of give some quantitative or qualitative sense, and the 5 to 5.5% is what you're saying for the full year, right?
Yeah, 500% to 6% is what I'm talking about for the full year. From a generic perspective, the current quarter we have spent 47% of our spending on R&D has gone to generic and 53% has gone to specialty. Does it answer your query, Shyam?
Yes, yes. So should we look at a similar mix in terms of, because if the biosimilars, how many projects are we doing, Govind, on biosimilars?
Yeah, I think Mr. Reddy will be throwing some more light on biosimilar, Shyam, so we'll get better idea.
Phase 1 now, we are completing the clinicals. Now what we already started clinical from last quarter, a minimum amount around 3-4 million. This quarter we spend on the clinical around 17 million. And we have 5 products we are focusing. Out of the 5, we are going to file 2 products in Europe in the end of the next year and 1 product in US. Maybe the second, 3 products in Europe, 1 product in US. Maybe that another product also may file in US, but 3 plus 2. But otherwise, as on today, it is 3 in the 2021. 3 products in Europe we file, 2 products in US we file. Other than that, we have 2 more products we are doing the clinicals. In total, 5 products we are doing clinical. This clinical will end up to 2022 to 23, middle of 2022 to 23. This is the phase 1. Other than this, we have phase 2 will start from 2022-23, middle of 22-23. Another 8 products in the beginning stage at the time that will start. So more or less, this clinical expenditure will continue to be there at least 2 to 3 years minimum.
Got it. So Alpesh, just following up on this one, in terms of second wave biosimilars, if I could use the term, is there any lesser requirement in terms of can I just do a phase 1 extended and not do phase 2 or phase 3? Let's assume I'm just throwing it in there, but have you seen anything from the regulatory perspective which makes you believe?
We are closely monitoring. In UK have an association, UK, Canada, and something for 3-4 countries, and some cases going on in the US also. So we are closely observing, and maybe whatever you are telling may be possible with the extended phase 1 or something like that. But let us see for future, what will happen in coming quarters.
I think Shyam, Mr. Reddy, when he said the first 2 products, 1 towards the end of this year and 1 towards the beginning of next year, is also like extended phase 1 only, Shyam.
Okay, got it. Helpful, Govind. My second question is just in growth markets, 30% constant currency growth. Govind and team, what are these key geographies, right? It's now become large enough, so if you can just give us some color there, and what's the path forward?
Yeah, the main growth markets are Canada, Brazil, Mexico, Colombia, and this side of the world is South Africa and certain Eastern African and some South Asian countries. And going forward, I think we are focusing only on select growth markets. We are improving and increasing the filings there, and we are keeping on radar one or two large emerging market depending upon opportunity which comes along for inorganic growth.
Got it. Thank you and all the best.
Thank you. Our next question is from the line of Girish Basu from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my question. Great set of numbers. First question was on injectables, good recovery in the quarter. Can you give us a broad guidance how overall injectables essentially moves from here? And if possible, if you can also share from the overall share, this quarter was something about 19.6%. Where do we see this share going in, let's say, 3 years?
Yeah, Girish, our generic injectable business has seen a significant improvement in the last 5 years. The current annual run rate of our generic injectable business in USA and other markets cumulatively is around $380 million, and this is expected to reach around $650 to $700 million over the next 3 years. This will be predominantly driven by our new plant in the USA, new plant at Vizag for Europe and emerging markets, as well as our expansion in Unit 4, apart from the ramp-up in UGM.
And Govind, within this 650, 700, is it possible to share more split US versus growth markets?
I think till the facility for the emerging markets and Europe kicks in, like it would be driven more of US. And once that facility kicks in, I think the skew would be like, I think the growth would more start from once the approval approves, like it would be from more of Europe and emerging markets to catch up with the US injectable business, Girish.
We are doing, Govind, a lot of Europe and emerging markets. We are already started doing the oncology, and we are also doing from our existing US plant some 10-20% we are doing for Europe, as well as a lot of antibiotic injectables we have.
Sorry to interrupt, sir. We're not able to hear you clearly.
Hello?
Yes,
are you
sir.
able to hear?
So you're sounding very soft.
Hello? Are you able to hear now?
Much better, sir. Thank you.
Yeah, so we are doing, and now at present we are dedicated, as those told in Vizag, we are putting a new plant will be completed in next 12 months, and that is for Europe, only Europe and dedicated to emerging markets. With all these things, which growth we are expecting, and our US plant is already ready, and exhibit batches we are doing in January, February time. It is also a reasonably big plant with the 5 lines. So with this, we have total in our portfolio 6 injectable plants, including oncology. Oncology is very beginning, so we have very update in our injectable. As Govind told, 700 reaching is not much difficult in our opinion.
This is very helpful. And just related in the growth markets, I know they come in a bit later after US, Europe. Is the competitive landscape very different when you look at markets like Canada, Brazil, Colombia, Mexico, and South Africa? And injectables per se, I mean, as a strategy, if you could throw more color on, like, is it relatively less crowded? That would be helpful.
Govind?
Yeah, so obviously injectable is subjectively relatively, like, I think, less crowded compared to the other portfolio, which is true. And also I wanted to add, we already have injectable marketing team with us in Europe. Sanjeev, would you like to throw some light on that?
Yeah, we are actually number 1 in hospital generic market in 2 of the large European market, and there are several other markets where we have ongoing hospital team, which is marketing the in-licensed product or in-source product in oncology as well as general anesthetic and antibiotics. So I think this new plant is going to further support the effort.
Thank you. I have more questions around the queue.
Thank you, Girish.
Thank you. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Yes, thanks for the opportunity and congratulations on great set of numbers. I want to understand a bit on the US market. If you could help us understand how is the scenario post September, like how is this quarter been?
Your voice is breaking.
Is this any better?
No, ma'am. Can you speak a little far away from?
Is this any better?
Please go ahead.
Yeah, just want to understand the US market from an injectable and overall perspective post the Q2. How is the recovery and any impact of the next COVID spikes that we are hearing around, and also in the Europe, if you could add color.
Swami? Okay, so let me take that. As far as the current...
I didn't understand the question also.
Yeah, let me just take this. So, as you would have seen that due to reduction in elective surgeries and lower number of footfalls in the hospitals, the demand for certain therapeutic segments, particularly let's say antibiotic, have come down, which has impacted our business in the Q1 FY21. However, currently we have seen... Sorry? Currently we have seen the recovery in the injectable business in Q2, and we have reached our internal budget. So as that is the same case as far as even Afrotech is concerned in terms of from our injectable business again. Does it answer your query, ma'am?
Yes, and sir, on the facility update, if you could make some comment.
Okay, so you are talking about from the regulatory perspective?
Yes, sir.
Okay. So as far as Unit 1, 9 and 11 is concerned, we have completed the committed CAPAs, and we are awaiting the further direction from the regulator as far as US is concerned, since we have already completed the remedial measures. Post the completion of the remedial measures, our Unit 11 was inspected by regulatory authorities from Europe, Japan and Brazil, and we already got the GMP certificate for Europe, as well as the Japanese authorities have concluded the inspection, and Brazil also has cleared the inspection. So all the inspection has gone well is what I would say. As far as Unit 1 is concerned, the facility was inspected by Europe and we received the GMP certificate. That is as far as the 1, 9 and 11 is concerned. As far as Unit 7 is concerned, we have completed the committed CAPAs till date and we are awaiting further direction from the regulator. As far as AuroLife is concerned, we already engaged consultants and will be submitting our response in the current week. And so we will be, after we submit the response, we will be awaiting further direction from the regulator to move forward.
That's helpful, sir. And sir, any additional comments from a European perspective from the profitability side? Have we seen improvement there? And should the entire gross margin improvement that we have seen and already highlighted earlier should continue?
Yeah, see, if you recollect, we had this Actavis business acquired about 5 years back, and from loss-making it was turned into the positive EBITDA and the positive PAT status. After that, we acquired 1.5 years back the Apotex, which is also loss-making, and we have initiated number of other actions, such as streamlining sales and marketing operations in the 5 countries of Apotex business that we had acquired. Then we also merged the companies in 3 out of 5 countries, that is Spain, Czech, and the Poland. And the Belgium and Netherlands will be merged in Q3. At the same time, we have filed the products which were sourced from other sources to a lower cost of base of manufacturing, and the products have started supply in Q1 and 2, and that pace will increase. We have launched new products also from an enlarged platform in these Apotex countries, and that is ongoing efforts. So at the same time, some of the high manufacturing base which we had in Leiden in Netherlands, that we have turned into contract manufacturing. So you will see the further gross margin improvement going forward, but it has already, some of the benefit has already come. And overall in European business in Q2, we have again touched double-digit percentage EBITDA level.
That's very helpful, sir. Thank you and all the best.
Thank you. The next question is from the line of Tushar from Motilal Oswal. Please go ahead.
So just on the ARV front, if you could just explain the kind of conversion that has happened from PLE to PLD, is that more or less stabilized now, or you see significant conversion even going forward?
Yeah, the current procurement volume of PLD is almost around 8 to 9 million packs. In fact, we believe that some more transition would happen, which will, after that, it would reach around 14 to 15 million packs over the next 1 or 2 years. So this will further drive our growth in terms of the overall market share for us.
And so what would be the current market share, if you could share, in the PLD space for Aurobindo?
So we have not spelled that specifically in the market share, and also it is difficult because you need to measure across various aspects of it. Like I think currently we are pretty happy with the market share what we are having.
Maybe 20%.
So broadly considering this PLE conversion and gain in market share, so the run rate in terms of ARV revenues can still be further in the range of 20-25%, or it could little taper out?
No.
Yeah.
So ARV is more or less stabilized. This one, there may not be little growth. That's what he asked questions on.
Yeah. So we expect to maintain the current momentum is what I would say, sir. So because once that 8 to 9 million reaches the 14 to 15 million, again to that commensurately we will be able to grow our business.
Got it. Thanks a lot.
You're welcome.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. Thanks for this opportunity and congrats to the good set of numbers, sir. So my first question is on this, and I would first congratulate for multiplying the value in the natural transactions what we have seen. See, it is almost like 5x, I believe, over last since our investment. So now on this, so this practically makes us a kind of net case company. So if you can talk something more on the uses of this fund, and do you still believe there are some gaps in terms of asset or in terms of product, so which could think about allocating for acquisition or something like that? Although you have broadly said that no big ticket acquisition in the near future.
Yeah, you're right, Surya. Like I think we have categorically said that we are not looking at any large ticket acquisition for at least foreseeable future, let's say, couple of years. And so the current year capex is around 180 to 200 million, and I would say that we would like to maintain that. Apart from which is over and above that, like I think we are looking at, like I think the PLA scheme as well. That is something which should be an additional investment, if at all, if we move forward, is what I would say as far as PLA is concerned. Apart from that, from a capital allocation, we are also setting up an injectable facility, as Mr. Reddy and Sanjeev both had explained, for Europe and emerging markets in Vizag. And we are also setting up a capacity for inhalers and dermatology in US. We are also planning to expand our API capacity to focus on external sales, because our current capacity is absolutely, like I think, feeding well for our internal supplies, and we feel that I think we can create capacity for enhancing our external sales. Apart from that, our spending on specialty product basket will also increase as we move forward. As you might have seen that the R&D expenditure is also more skewed towards, like I think, the specialty. So this is the overall capital allocation plan, Surya.
Okay. So that means that there is no bullet debt repayment likely also. Why? Because it is anyway the cash generation from the internal accrual itself is likely to be sufficient to handle the current debt position. Is that right, sir?
Yeah, I think I would rather allow Subbu to take this in terms of whether it is a bullet payment. Yeah, go ahead, Subbu.
So, we are at present having all the things by way of the short-term loans, which when I meant by short-term loans less than 1 year or 1 year. So we will be able to handle all these things within the internal approval of the existing business. So as we said earlier, by 31/3/22, the existing business will generate and then wipe out the entire debt. The natural money which has been there, which will be allocated for various initiatives, various strategic plans which go in the articulated earlier.
Sure. Thank you, sir. And the second question, sir, on the vaccine side. So I think multiple initiatives that you have taken, and particularly for the COVID vaccine, which is the kind of buzzword at this juncture. So I think dual initiatives that you are taking. One is the Oro vaccine in US, and also simultaneously tie up with the multiple government agencies here in India. So what is the thought process? Why multiple COVID targeted vaccines? And what is your ultimate thought process around it? And if you can share something on that, and how what is the kind of progress so far we have achieved on our initiatives on the COVID vaccine front?
Yeah, I think I would clarify this way. So there are three-pronged approach we have taken. One is in terms of our own vaccine, one is in terms of the CSIR labs, which in fact there are three different developments and three different platforms by three institutes. Apart from that, we are also exploring a collaboration with potential partners who will be getting ready with the product sooner than like our product or even CSIR's product. So this is a three-pronged strategy is what I would say. Our product is slightly delayed, but having said that, I think CSIR's product is progressing well. And our manufacturing facility, we are still targeting to complete it by March-April timeline and start the qualification by April, and we can start commercializing it by April-May timeline. That is the plan. And the reason is very simple and straightforward, that I think the facility what we have created, will be having a capacity on a multi-dose level. It's around 450 million doses. And the objective was we would be able to utilize the facility along with our partners, whoever is getting ready earlier than whatever efforts we are investing on. So that is the reason we went ahead and created the capacity. That's the plan. Does it answer your query?
Yeah, yes, sir. But just some more clarification on it. So, like, why Oro vaccine means why the development in US? That is one. Are you thinking about global business opportunity there? That is why. Or secondly, here you have talked about the partnership or partner. So whether initially it would be like a commercial manufacturing or some third party, that is what we are initially thinking about when we say that our commercialization can start early May, April, May, like that.
Yeah, I said the manufacturing facility would be ready by the April-May timeline for commercialization as far as the manufacturing facility is concerned. And when we collaborate with partners, it would not be, it is a multi-pronged approach again there. We could be like even doing the manufacturing, taking the product bulk from them, and over a period we can even do the bulk and then do the finished dosage. And we will also be taking certain markets for distribution as well. That is as far as the partnership is concerned. To answer the question on why the development in the US, because we acquired a company called Perfectus Life Sciences, which in fact we rechristened it as Oro Vaccines, and they have the VSC platform on which the product is getting developed. So that's why we are developing the product in the US. Any further query you asked, because I heard some other aspect as well. Anything I have unanswered, like, can you tell me?
No, that's it, sir. Thank you a lot.
Thank you.
Thank you. The next question is on the line of Kunal Dhamesha from MK Global. Please go ahead.
Good morning. Thank you for taking my question. So the first question is, now that we are focusing more on injectables in Europe as well as emerging markets, so specifically on Europe, the margins in that business, does it significantly higher than what we are currently making in Europe, or is it largely in line, or how should we think about it going forward?
Well, I think, of course, I mean, Europe margin cannot be compared with US, but if you have been tracking the Europe history, actually there used to be compression of margins 5 years back, and there used to be higher and higher demand for discount, even some price cut. That we have not seen pressure in last 3 years or so. So Actually, we are steadily improving the margins through better gross margin at a manufacturing level, as well as in terms of improving our market share and thereby gaining some kind of advantage.
Overall, compared with Sanjeev, margins in Europe is slightly lesser than here for injectables.
Okay.
Yeah.
Okay. And secondly, on the injectable pricing in US, so I think for last couple of years we have seen kind of a positive pricing trend in injectable space. But do you believe, given a lot of players are now focusing on injectable and with the pipeline that we have and the LOEs that we are seeing over next 4-5 years, do you believe that positive pricing is sustainable for next 2 to 3 years in injectables in Europe?
In country also the huge margins may not be sustainable. That is what I strongly believe from the beginning. But the same way the injectables also the may come down few points, but injectable, because it's having a lot of the compliance issues and a lot of other issues. So injectable naturally some points of margin always is slightly more than the oral. But a bigger margin I don't believe it. Either oral also I don't believe it. Bigger margin will stay only temporary but not permanently.
Okay. Thank you.
Thank you. The next question is from the line of Nithya Balasubramaniam from Bernstein Research. Please go ahead.
Yeah, hi. Thank you. A quick one on the export incentives capping. I was wondering if there was an impact this quarter, if you can help quantify it, and how should we think about it going forward? What are you hearing from the government?
Yeah. So the export incentive we have taken only up to the period of August this year. We have not considered the export incentive for the month of September. The government is coming out with a new export policy, incentive policy, which will be hopefully by 1st of January onwards. At this stage,
that is 5% or something is coming. That is not at all negligible. You have to reimbursement. Going also knows about that. It is not much calculated.
Yeah, I'm so sorry, that comment wasn't clear. If you could repeat that for me.
Yeah, that's what Subbu was driving at. So yes, we will be having some drop in terms of the numbers because of export incentive, but we are working hard towards how to still maintain our margins.
So is there any indication from the government that they might come up with some other form of compensation export companies, or would it fall on you to figure out other ways of mitigating the...
My opinion is, I think I don't want to second guess that. I think it is better that we see that and then decide how it is. I think we are mentally prepared that worst case scenario there will be some drop, and we have to work hard towards ensuring that we are able to maintain our margin even after the drop. That's what we are working towards, Nithya.
Okay, got it. Another quick one on the ARVs. So just a bit of help to understand how long do these tenders typically last? What is the cycle that you normally have when it comes to ARV tenders?
Yeah, so if you take a South African tender, you are aware of it is for a period of 2 years, and other tenders, 3 years. 3 years. Thanks for correcting, Shruti. So 3 years. As far as the other tenders are concerned, it would be cyclic. I think certain tenders could be for a year, certain could be 6 months, certain could be even shorter. We typically, all other businesses other than South Africa, if we put together, we will always have visibility to the extent of 3 to 5 months, I would say.
3 to 5 months, okay.
Yeah, from orders also, be for at least 3 months, and then we will have clarity for even for subsequent 2 months in terms of clear forecast, which will get converted.
Understood. Thank you so much. That's very helpful.
Thanks, Nithya.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, good morning and thanks for the opportunity. My first question is if you could, reiterate your R&D guidance for second half and next year, given that there are various initiatives in the biosimilars, depot, and other complex injectables?
Yeah, this year we are guiding around 5.5 to 6% for the full year, Prakash, because the first quarter, if you remember, it was around 4.3%, if I remember it right, and the current quarter is around 6.3%. So overall, this current year we would be guiding still around between 5.5 to 6%. As far as next year is concerned, I think we would like to maintain this, but you also have to appreciate the fact that we need to relook in terms of how the concentration of biosimilars phase 3 can happen. If that happens, it can slightly go up by another 1.5%, if it gets concentrated.
Okay. And just wanted to understand, like, since we are in few of the products in the second wave and in optical maybe the first wave, what kind of approx ballpark number we are spending on each of the molecule? I mean, the Biocons of the world typically spend about $50 to $70, $80 million, which are in the first wave. So I understand we would be half of it or less than that?
I think the Reddy would be...
Everybody is more or less same. Nobody will spend high and nobody spend low. You see, the clinically everybody doing in the international acclaimed laboratories, and R&D costs also are there. More or less, everybody is around 40 million, plus or minus 5 to 10 million.
Perfect, great. That's helpful.
Again, we are talking about R&D and clinical and other preclinical or pilot phase 1. Those things we are talking. We are not talking about the best manufacturing, those areas we are not talking.
Yeah, to add to what Mr. Reddy said, Prakash, there are a couple of products which could be much lower where he had earlier clarified that we'll be doing extended phase 1. Those would be much lower than this number, whatever Mr. Reddy is talking about. That is for the global products.
Those two products, all other products, everything.
Exactly. Those two products, it would not be the same number. Yeah.
Okay, understood. Fair enough. And given the the pipeline that you have been disclosing in your presentation across complex products, what is our 3-year outlook on the base that we have? So what kind of, we've been typically doing mid to high single digit growth. Would that, this kind of pipeline would help to sustain that, or could we see a little step up on the growth platform? 3 to 5 years, sir.
Sir?
Yeah, we are, as you know that we are doing a lot of efforts. We are doing vaccines and biosimilars and a lot of injectable capacity increases and all these things. We are confident in between 5 to 10% the growth will continue to be there. Maybe except 1 or 2 quarters here and there may be. Otherwise, we are very, very confident of this year.
Your voice is very muted. You are saying confident of doing what percentage, sir?
Confident of maintaining this growth.
Okay. And
5 to 10% of growth.
Okay. Perfect. Great. That's all from my side. Thank
my
you.
phone is some problem. I don't know. I will put over landline.
Okay. Actually, one more, if I may. On the New Jersey, the recent FDA action. So I'm sure we have taken all the precautionary measures and, so given that, the 483 is still not available, what do you think would be, time required to address and, go back to FDA, in terms of timelines, CAPA plans and all this. So when do you think that you would be ready for a reinspection?
We'll be, in fact, submitting our response for the warning letter this week itself. And in fact, as part of this particular response itself, like I think good percentage of CAPAs would have been closed. And we'll be further working with them in terms of the way forward. That's what I would say at this juncture, Prakash.
Okay. But any timeline, sir? What we want to say to FDA that we will be ready in a year, 6 months?
No, I think we should be, for us, in terms of completing this CAPA, it should not take more time. It is more, for us, I think the existing facility as CAPA should get addressed in the next 2 to 3 months, I would say, or maximum 3 to 4 months. It would not be beyond that, is what I would say, Prakash.
Okay. Perfect. Great. And all the best.
Thank you. The next question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. Just wanted to have some clarity on what kind of investments have you made for this vaccine facility? Total investments?
Yeah. So when we are talking about total investment, you are talking about both bacterial and viral facility you are talking about?
Yeah.
Yeah. So it would be in the range of, Subbu, can it be around 250 to 300 crores?
That will be that both put together, it will be around 250 crores.
Yeah, around 250 to 275 crores is what I would say, sir.
Okay.
It's all nothing, and there is no clinical now. That those things will start this type of clinical. Is it right, Govind?
No, sir. For bacterial facility, we are already moving to phase 3, sir. That would get monetized earlier, where there won't be much of an investment. Whatever clinical investment would happen on viral, sir.
Okay. So, and when we talk about all these leading vaccines which are in the late phase 3 trial, so in terms of capability, whether it's RNA or DNA vaccines, we have the capability to manufacture either, or we are just a fill and finish kind of a facility?
No, I would answer it this way. From a fill and finish, we have a capacity to either go for liquid filling or a lyophilized product. We have the capability to build that. As far as the drug substance is concerned, I think we need to evaluate, because suppose if you take an example, we are collaborating with one particular group, wherein I think this product can be made anywhere. It doesn't have any restriction in terms of where you need to make it. With the mRNA, I think we need to understand in terms of how the bulk need to be produced, because we have the capability of doing it in the fixed bed reactor, or we can even go for a conventional bioreactor. So we need to understand in terms of each of this potential partner what they are looking for, and then we will be matching and letting them know how do we go about it. That's what we have been doing so far, Rahul. But we have the capability.
Oh, yeah.
Sure. Fair point, sir. This is helpful. Thank you.
Thank you. The next question is from the line of Tushar from Motilal Oswal. Please go ahead.
So just to recap in terms of the capex requirement, in terms of this separately in terms of injectables or the inhaler dermatology facility or the API facility.
Yeah, what we have projected is around 180 to 200 million, because you would agree with the fact that all this investment will take approximately from today, if you take it, it will be 24 months. So partially this will be this year, partially next year, and something can go to the subsequent 2 quarters. You can take it as this year and next year, it will be around 180 to 200 million is what we are planning. Apart from those, the PLA scheme is what we are mentioning.
Got you. And this included the vaccine manufacturing facility capex as well.
The vaccine manufacturing facility has been already invested, Tushar. That would get concluded, most of the investment in this year itself. Because when we are talking about trying to commission the facility by April, May, so most of the investment would happen in this year itself.
Got it, sir. Thanks, that's it.
You're welcome, Tushar.
Thank you. The next question is from the line of Charulata Gedani from Dalal and Broacha Stock Broking Private Limited. Please go ahead.
Yeah, hello. I have 2 questions. One is on the ARV. Do you think the numbers in the ARV business are the new norm, or do you see them coming down because of COVID?
No, we are not seeing that, and currently we are able to maintain our business, and we are able to grow is what I would say at this juncture.
So we can take this as the run rate going forward?
As I have mentioned earlier, ma'am, so we typically have firm orders for the period of 3 to 4 months, and even have visibility for the subsequent 2 years, so we can currently take this as the run rate, ma'am.
Okay. And what is to which geographies do you supply ARVs?
Majority of it would go to PEPFAR markets, madam.
PEPFAR, okay. And what about South Africa?
Yeah, so additionally South Africa would be there, but majority of it would be still PEPFAR.
Okay.
Because PEPFAR includes those African markets only, madam, most of it.
Okay. Right. And currently, how many injectables have you commercialized in the US?
Around 60, madam. Around 60.
60. Okay.
Yeah.
Okay. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Amit Goela from Rare Enterprises. Please go ahead.
Yeah. Sir, good morning. Thank you for the opportunity. So I've got two questions, more strategic in nature. So one is you have executed brilliantly and the numbers are also very good. So congratulations on that. So going forward, now for the first time we are getting a company listed in the country which is purely injectables. And our size of injectable business is almost similar to theirs, if not slightly bigger. So could you throw some more light on the injectable business in the US? Number one. And so how do you see your generic business going forward over the next 2-3 years? Like what is your strategy and how? Because so far you've executed brilliantly. And going forward, how do we see this business? Like what kind of growth numbers and products? Like you're adding a complex pipeline to that, but pure generics, how do you see it going forward? If you could say a few lines on that, sir.
Would you like to answer, sir? Mr. Reddy?
Yeah, injectable business, as we told before also, just few questions sometime before, 10 minutes before. As Govind told, from present 380 million, we are confident of next 3 years to reach around 700 because there is a better growth we are expecting. And the pricing side also more or less same or slightly lesser. And otherwise, as far as the orals and other area of the products are biosimilar and all that, as we told, overall the company growth is 5 to 10% we are expecting. You just now told that answer also. This is what you are asking or any other thing I am missing from you, sir?
No, sir. One is like, say, injectables is good to know, sir, in terms of if you could throw some lights on the margins, if possible. And the generic, you've had solid volume growth over the last few years. So what is your strategy on that over the next 2-3 years? Are you going to be doing more of the same, or are you looking at something different like so?
Now we have generics, ANDAs, oral products. We already filed around. We have yet to get approval 182 products, including tentative approvals, or the filed and to be approved or to be launched. 182 products at various stages, and other than that, 290 products at the various stages of either exhibit batch or filing. So we have a very good visibility for next 5 to 7 years. So that is what we are telling based on all this background, and we have biosimilars and in other areas and specialty and difficult to develop. And we are confident the growth can be continuing in the near future in 5 to 7 years.
Okay, great.
Afterwards, we can tell you after some time.
Okay, sir. So thank you so much. And once again, sir, like that Nitral transaction was brilliantly done, sir. Thank you, and all the very best, sir. Yeah.
Thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. So my question is on the European business. So from the current portfolio right now, like how many are manufactured at your own end, and how approximately like how many are outsourced or in license? And with regard to that, how many products you are planning to transfer from in-licensed outsourced to own manufacturing, say next 2 to 3 years time frame?
Yeah, so actually, we have in-licensed. In the largest country, we market almost 600 products, like France and a couple of other countries. And we are supplying about close to 200 products from India. But don't go by the number of products, but percentage of sale, I think it is growing, and we are leveraging the cost difference. And over the next 3 years, I think we have more than 250 products under development, including the UGI and oncology products.
Okay, sir. If we don't look at numbers, approximately in terms of sales percentage, right now you are having more sales from the outsourced or in-licensed products, but eventually you are planning to increase share from the products manufactured in-house, right?
That's right. And however, we have to keep in mind some strategic advantage of manufacturing in Europe. Have a Portugal facility.
We may not change the existing products. Maybe the new additional products where we are going to manufacture in our Portugal plant and our Unit 15 oral Vizag plant and China plant. Also, we are going dedicated for Europe as well as for only within China. So 3 plants we are allocating to emerging and Europe plants.
Okay, sir. That's helpful. And just referring to this China update, it's been a while like we heard anything. So what's the progress on the move for Chinese market? Like how should we look at that part of the business?
No, I think we are completing our plant. We are going to start the exhibit batch in the month of February, March, and the first batches we are taking in the February, and from there we are taking every month. We are taking 3 to 4 products is our goal. Some for Europe, some for China, and some for both. So this is what we are planning, and we are also filing from India. As on today, we have filed around 27 products, and but unfortunately or unfortunately, we have not got any approval. But we are going to get approval in next 1 month, at least 2 products. That is the present situation in our Chinese operations. Madam, can have I explained you properly, or you want me to tell any different?
No, sir. What I broadly understand, China we are progressing, though it might take some time before we can see actual sales coming in from these new filings, right? If I understand correctly.
Actual sales will come because the production is starting from February in the next 3 months. Actual sales, my personal opinion, will start in 2022 for the local China sales. But we are doing some from China plant for Europe sales. We are doing second half of 2021.
Okay. Products manufactured at China plant for the European market. That will start. Okay. Okay,
that starts second half of 2021.
So that's helpful. Thank you.
Thank you. The next question is from the line of Tarang from Old Bridge. Please go ahead.
Hello, sir. Good morning. Firstly, congratulations on fantastic value creation on the Matrol sale. Between the price at which we bought it, the price at which we sold it, and the profit that we made in the last 5 years, I think the value creation has been significant. Just wanted to double check. This question has been asked a couple of times. The capex on the Vizag plant plus the capex in North America plus API capex will be over and above the organic capex guidance of $180 to $200 million. Is that correct? Have I got it correctly?
Most of it will be accommodated within that, is what I said. So when I say 180 to 200 million, sir, all these capex would never happen in one single year.
Sure.
So that is the reason that as we progress, I think within this number we will be able to complete, because any project when you take it up, it would get spread over a period of 18 months or 24 months depending on the complexity of the project.
Sure. So then in that sense, Govind, sir, if I look at your capital structure today, your balance sheet is probably at its most conservative form it's been in the last decade. Your net debt in FY10 used to be almost 2,000 crores when you had a similar net worth. And now 10 years, your net worth has gone up by about 9x and your debt is down to 1,500 crores. Further, if I consider these $180 to $200 million of capex, in my calculation, you will still be left with $200 to $250 million of organic free cash flows, post capex and tax. And with Matrol divestment, and an extremely benign interest rate environment, would it therefore not be prudent for you to maybe, lever up your balance sheet appropriately for a suitable acquisition, or in absence of any, seriously consider a buyback?
Yeah, my answer is, I had earlier said that as well, sir. What we are not considered in this particular topic, what are we talked about, apart from 180 to 200 million, and also the R&D investment which may come up from a cash flow perspective, we are also looking at the PLI scheme, which we are not concluded yet. And as we progress, we need to consider that as well, and then only you have to take up a decision in terms of how do we move forward.
Sure. Okay. Is buyback being considered, sir?
Sir, I think it would be considered after you allocate all the needs, and then only if you have surplus, that will be considered. But please understand the fact, as I told you, the next 2 years we have clarity in terms of what we need to do, other than the PLI scheme is what I said. Once we make up our mind, the board will consider and they will take the appropriate decision is what I would say, sir.
Got it. Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Krishna Kiran for his closing comments.
Thank you all for joining us on the call. If you have any questions unanswered, please feel free to keep in touch with Investor Relations. The transcript of the call will be uploaded on our website, www.aurobindo.com, in due course. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Aurobindo Pharma Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.